This is an HKML research production. Alternative Data in Finance by Jean Ekster and Peter Kolm. A summary. This video will define alternative data in finance, the alternative data ecosystem, alternative data in fundamental funds and quantitative funds, the challenges with deploying alternative data, the valuation of alternative data sets, and we will finish off with key takeaways from the paper. Alternative data in finance is non-traditional data sets used by quantitative and fundamental portfolio managers to deploy profitable trading signals. Traditional data sets normally derives from the likes of Bloomberg and Thomson Reuters. Alternative data ranges from satellite imagery to social media activity mining to generate insight into trends and growth before official data is released. They tend to be non-financially related and be costly to procure and utilize. Companies who provide alt data tend to have it as a secondary business. The alternative data ecosystem is split up into three areas: the originator, the intermediaries, and the consumers. The originator is the first point of contact for the alt data into the hedge fund industry. First-line ownership and full distribution control characterizes the originator. They may obtain their data via several ways. They may have unrelated core operations, or they may overlook public records, or they may have long-term exclusivity of the licensing, usage, and distribution rights of the data, or they may conduct primary research to yield insights. The intermediaries are data brokers who bridge the gap between data owners and users. Intermediaries act as data brokers, full-service research boutiques, and anything in between. The intermediary space has changed over time, from vendors like alternativedata.org to brokers of unaltered datasets. An example includes raw data and data curators that create dashboards and Excel products from raw data. For the consumer, it is important to understand the difference between the originator and the intermediaries, as it is the most common mistake leading to costly errors. Alternative data can be a costly function, therefore influencing firms to cut corners on some technical aspects, which can lead to errors down the line. Furthermore, aggregated data has fewer investment values because cleaning the data is a destructive force which reduces the ability to identify unique investment opportunities. As well, similar data products that are shared amongst competing firms result in data being priced in security prices at a faster pace. This is called alpha decay. The example shown here is a good example of the data ecosystem. As you can see, companies like UnionPay collect user data. Thereafter, consultants and data brokerages bridges the gap between the originator and the consumer. Alternative data in fundamental funds. Quantamental research is not a new phenomenon. However, studies by Denev and Arman has shown an uptick in quantamental research in 2020. Quantamental is widely used by funds to predict revenues. A study conducted by Ekster in 2015 suggested that fundamental funds tend to shy away from alt data due to its marginal returns and high operational costs, highlighting a barrier to entry for investment funds. Alternative data and quantitative funds. A major misconception about alternative data is that it is widely used by quantitative funds. While a few have used it longer than others, the purpose of its use is unclear. What is known is that the data input is combined with more traditional data sets. The challenges of alternative data. In its raw form, the alternative data is unstructured, unprocessed, and not purposely built for institutional investment customers. Entity mapping in its current state is static. Its systems and methods are counterintuitive and is poor at managing relationships between products and parent companies. However, there are machine learning solutions which shows promising fast dynamic mapping solutions. The biasing is also another challenge faced in alternative data. Chances are the data collected will exhibit a degree of sampling biases. Unless the sample was chosen at random, any findings will be distorted or completely wrong without addressing the bias. Alternative data rarely comes bias free, and because the data is anonymized and lacks certain attributes, it makes it difficult to identify them. The value of alternative datasets. Currently, there are no theoretical basis for alternative data evaluation, and they are relying on two fundamental methods of evaluation. The golden triangle identifies significant changes in the dataset referred to as data events or catalysts. It also identifies an associated real-world events from public information sources, including Newswire, third-party data, or company reports that provide and support data for each event, and it determines changes in return of tradable security around the time of each data event. The report card is another methodology used to assess the viability of alternative datasets in an investment context. It describes the main attributes of the dataset and the characteristics of the data vendor and the data ecosystem. Attributes of the dataset could also include company coverage, scope, representatives, and applicability. Vendor description may highlight the type of data collection and distribution practices. Often, hedge funds will develop their own report cards with a unique scoring system. However, as well as the golden triangle methodology, the limitation of this methodology is quite time consuming and qualitative in nature. The key takeaway of this paper is that analyzing alternative data is time consuming and capital intensive. It requires investing in infrastructure and people. Few investment firms profit from alternative data without investing in their own in house capabilities. Some alternative data providers are not serious and may waste your time. Investment firms would need a systematic way to automatically and quickly assess whether a data set is valuable or not. As a result, not many firms are capable of using alt data at scale. Alt data is not necessary for systematic quant strategies, but can also be used to enrich the analysis of fundamental portfolio managers. For more information regarding quantamental investing, please visit our video. The link is attached below. I hope you enjoyed our summary. Have a great day. Bye.